Good morning. It's Wednesday, March 13th, about 6 a.m. Central Time. All right, the precious metals are higher after yesterday's surprise uptick in CPI. You have April gold up $2 at 21.68. May silver up 11 cents, 24.50. May copper up 6 and a quarter at 3.99. That's a 1.5% move higher. You also have April platinum up $10 at 9.38, up 1%, and June palladium at 10.82, up $29. That's also up 2.88%. So yesterday you did have a surprise uptick on CPI that did apply pressure to the precious metals complex. Gold, silver, and platinum are all down 1%. Gold traded down to about 21.56. Silver traded down at 24.22, and palladium traded down to about 9.15. Now, looking at the CME's Fed Watch tool, and you'll want to do that after some of these bigger announcements or economic data releases, the expectations for a Fed rate cut in May had declined significantly and went from 18% down to 13%. So looks like they're really phasing out any chances of a May rate cut. Now June surprisingly held firm from 73% down to about 68%. So all eyes are on the June meeting, and that corresponds with other central banks like the Bank of England and also the ECB expecting when they're going to make their first rate cuts as well. When the data came out for CPI, we saw a massive explosion higher in the dollar index, went up to about 103.31. But as the day session went on, the market kind of bled out. So the dollar index traded back below that 103 level and really was selling off. I think the only thing that kept the lid on the precious metals was the distraction of people trading in Bitcoin, people chasing the equities higher. We saw the S&P 500, the NASDAQ trade back up to all-time highs. Also, there was quite a big shift here in a lot of this different momentum. So the 2-year yield, it did hold higher. So if you throw a chart on that, it looks like a bit of a J from its upward level. And I think that was really the other thing that kind of iced any kind of rally that we would get back on the precious metals yesterday. Now the focus of today is going to be the 30-year bond auction, which won't be out till the afternoon. Other than that, it's going to be pretty much snooze fest here today. You do have some geopolitical events going on in Russia. Seems that there were attacks on there, attacking some of their oil wells, some of the infrastructure. So I think that's what's boosting the crude oil complex here today, as well as if you look at OPEC forecast, they're predicting global demand for OPEC for 2024 is going to increase 300,000 barrels a day and will likely reach 28.8 million barrels per day in 2025. So looking at the levels here in the gold and silver market, I think 21.45 definitely needs to hold. I outlined that really you don't want to see it close below 20.50. I felt that we were at lofty levels. And what that means is that you look at a 5-day move on the gold market, and it's well over $100, that if you do see some of those investors that caught that move, a lot of these people are FOMO momentum type people. They will shift out. They have no allegiance to specific asset classes. They'll probably divest themselves from something and go immediately into something with momentum like Bitcoin, like the NASDAQ market. So below that 21.45, I really think it's dead air down at 2100. You have pocket support from 2077 down to 2065. That's going to be your 50-day moving average. And really you need that pushback through 2200 in order to reattract those buyers back into the market. So be a little bit patient here with the gold market at the moment. Silver, on the surface, it looks a bit disappointing. However, if you look at the recent consolidation we've had, that's been much more supportive. Also, the gold-silver ratio is slightly trending lower. 92 was about the high on the year for 2024. We bounced off that about 3 times. About 85 to 86 has been the low end of the range, sitting right at 88 right now. So the silver market really is consolidating. The bulls need to close over 24.93 in order to really ignite new bullish momentum on there. The bears need to close below $24, which is the 200-day moving average, and then below that is 23.30. That's your 50-day moving average, and then 22.91. I'd say it's all over. This entire move had completed itself. So if you're an Elliott wave guy, that chances are was probably the completion of any kind of wave formation. Looking at the other markets that we've taken some attention to, like the sugar market, after posting that 9.5-week low last Tuesday, really starting to break out back to the upside here, back over 22, up 12 ticks at the moment. Some of the key growing regions are not exporting, and some of the producers that are in producing regions that typically export are curbing some of their exports. So hence that bullish momentum. And then if you look at on the soybean market here, I think we'll have $12 as your resistance points. The funds are short right now, but they are starting to cover a bit as we get closer to spring planting and some of that weather. We also had that CONAB come out, and it was slightly bullish here. On the gold market, you will want to see those ETF holdings start to rise as they're down about 4% on the year. So you got any questions, give me a call. Again, I think it's going to be a bit of a snooze fest here today, and then tomorrow's when you're going to have that PPI data come out. If you have any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.